All right, so we're diving into KEC International's Q2 performance for FY25, and we've got their investor presentation and the regulatory filings all ready to go.
Awesome.
Our goal today is to really just break it all down, like what are the key takeaways you need if you want to understand where this global infrastructure giant is headed.
Yeah, and I think what's interesting right off the bat is the bigger picture.
Okay.
Because KC International is not just like a standalone player. They're actually part of the RPG group,
Uh-huh.
which is a conglomerate that has like a really diverse portfolio. I mean,
Wow.
you're talking infrastructure, you're talking even life sciences.
It's a range.
Yeah, so KEC is kind of like the powerhouse infrastructure arm
Yeah.
of this larger entity.
Yes.
And their reach is global, over 110 countries, more than 300 projects underway.
It's not just like one little backyard. They're pretty much everywhere.
They're everywhere.
And that's a key point because it speaks to their ability to navigate all these different markets and regulatory landscapes.
It's true.
And there's another interesting detail in this report.
Okay.
They report a happiness score of 83.
Whoa, hold on, 83.
That's not just a feel-good metric.
Yeah.
That speaks to employee satisfaction,
Right.
retention, which are crucial for a company that has such a large workforce.
Yeah, you rarely see a company report something like that, so it definitely suggests they're doing something right internally.
For sure.
Okay, but let's get to the heart of it.
Yeah.
How did they actually perform this quarter? Like, give me the headline figures.
Short answer, very well.
Okay.
Both Q2 and the first half of FY25 show some robust growth.
Okay.
Revenue for Q2 jumped 14% year on year, hitting 5,113 crore rupees.
Got it.
But the profit surge is even more eye-catching,
Let's hear it.
up a whopping 72%.
Okay, somebody over there is doing a happy dance.
Yeah.
And maybe it's not just the employees.
Maybe not.
But, you know, KEC isn't just a one-trick pony, right?
Right.
So let's break down how these different business segments are performing.
Yeah, I mean, you're right. They've got a diverse portfolio, and it's fascinating to see how the pieces are contributing to this overall success story.
Okay.
Transmission and distribution, or T&D, that's their bread and butter.
Yeah.
It's driving a significant portion of this growth we're seeing.
So T&D is the engine,
Yes,
and it seems like it's running pretty smoothly.
it is.
But what's fueling this growth spurt? Like, what are the insights we can glean from the report?
This is where it gets exciting.
Okay.
They've secured a record order book exceeding 26,000 crore rupees. That's massive.
Wow.
And these projects are spread across the globe. We're talking India, Middle East, Africa, Australia.
So they're strategically diversifying their pipeline?
Exactly.
Okay, but what's the real significance of this massive order book?
Yeah.
Is this just like a temporary spike, or is it a sign of some like sustained momentum?
It's definitely more than a blip.
Okay.
This points to a sustained and increasing demand for KEC's expertise in this T&D sector.
Okay.
I mean, their order intake for the year has surged 70% year on year.
70%?
I mean, that kind of growth isn't just luck. It indicates they're securing like a dominant position in this market.
That's huge.
Yeah, and building strong relationships with clients so that they get repeat business.
That's awesome. Okay, so 70% jump. I need a real-world example
Okay.
to kind of wrap my head around what we're talking about here. Like,
Yeah.
what is one of the we're crushing it projects that they recently secured?
One that stands out is a massive 625 megawatt peak solar PV project in Rajasthan.
Oh, wow.
And this isn't just big in terms of size, it's strategically important because it signifies KEC's move into this like booming renewable energy sector.
That's smart.
Yeah, so they're not just riding the wave, they're positioning themselves at the forefront.
They're ahead of the curve.
Yes.
Everyone's talking about renewables, and KEC's making sure they're not left behind, for sure.
But you know, they're more than just T&D, right?
Right.
What's happening with their other business lines? Are they kind of keeping pace?
Yeah, I mean, they're definitely active across various segments.
Their civil business is expanding internationally.
Nice.
You've got a new project in Africa, a region with some significant infrastructure needs.
Huge potential there.
Huge potential. And it seems they're just getting started there,
That's awesome.
aiming to secure more projects.
So they're planting their flag in new territories?
They are.
What about railways and cables? Any notable developments or challenges in those areas?
So railways is in a consolidation phase right now,
Okay.
focusing on wrapping up existing projects and optimizing working capital.
Makes sense.
You know, it's about maximizing returns from the current projects rather than like aggressively pursuing new ones.
Got it.
But their cables segment is making waves. They
Real.
just secured their first ever order to supply cables to the U.S.
Wow. Okay, that's a big one.
That's a significant win.
Yeah.
It expands their global footprint in like a major market.
Yeah. The U.S. is no joke.
Yeah, and they're investing in new production lines for specialized cables.
Okay, so they're showing that commitment to innovation.
Exactly.
And staying ahead of the curve.
Yes.
I like that proactive approach, especially in the cable segment. But all this expansion and growth,
Yeah.
it's got to be putting a strain on their finances, right? What's their debt situation looking like?
You'd think so, but here's the surprise.
Okay.
Their net debt has actually decreased
What?
by 1,074 crore rupees compared to last year.
I'm impressed. But how are they managing that?
It's all about smart strategies and this focus on efficiency.
Give me the details.
Imagine daily and weekly war rooms
War rooms.
where they meticulously track cash flow, identify areas for improvement, make real-time adjustments.
Okay, that sounds intense, but clearly effective.
Very effective.
It shows they're not just like celebrating the wins.
Right.
They're actively managing the financial side of the business
For sure.
with some serious focus.
Yes, and they're also focused on releasing retention money,
Okay.
which is essentially payments held back until the project is completely done.
Right.
By efficiently closing out those projects, so that frees up cash flow and reduces their reliance on external financing.
So it's not about cutting costs. It's about being strategic with your cash.
Exactly.
And it's paying off their net working capital cycle shrunk by 3 days compared to last year, down to 130 days.
Yeah, that's a sign of a well-oiled machine,
I love it.
converting investments into cash more quickly.
So the question is, can they maintain this momentum?
Right.
What's the outlook for KEC's future?
Yeah.
Are there storm clouds on the horizon, or are they sailing into clear skies?
Let's dive into that in part 2.
Okay, sounds good. We'll analyze those potential headwinds and tailwinds and assess whether their current strategy is robust enough to weather any storms. Stay tuned. Welcome back to our deep dive into KEC International's Q2 FY25 performance. We've painted a pretty impressive picture so far.
Yeah.
Strong growth, strategic expansion, and a pretty keen eye on their financials.
Definitely.
But now let's actually take a closer look at the numbers that underpin this success story.
Yeah, let's dive in. I mean, the raw numbers tell a pretty interesting tale. So starting with the consolidated profit and loss statement,
Okay.
their Q2 FY25 revenue clocked in at a healthy 5,113 crore rupees,
Got it.
a solid 14% jump compared to the same period last year.
Okay, so we're talking about healthy top-line growth.
Yes.
But it's not just about growing that top line, right?
Right.
It's about how efficiently they're translating that revenue into profits.
Exactly. Are they just growing the top line, or are their margins expanding as well? That's a key indicator of sustainable growth.
And that's what we want to see.
And this is where KEC shines their EBITDA. A measure of operating profitability surged 17% year-on-year,
Okay.
hitting 320 crore rupees.
Wow.
But even more importantly, their EBITDA margin, which tells us how much profit they're squeezing out of each rupee of revenue,
Right.
also climbed to 6.3%, up from 6.1% in the same quarter last year.
Okay, so they're not just growing, they're becoming more efficient.
Yeah, they're getting better as they get bigger.
That's the sweet spot.
That is the sweet spot.
Every business aims for, but we're looking at this kind of consolidated picture.
Yeah.
What about KEC's standalone performance excluding their subsidiaries?
Right.
Is the core business as strong?
Yeah, I mean, there's some variations, which is natural.
Sure.
On a standalone basis, their revenue grew by a respectable 13% year-on-year, reaching 4,484 crore rupees,
Got it.
with a stable EBITDA margin of 5.1%.
Okay.
The takeaway here is that both KEC's core operations and their subsidiaries are contributing positively to this overall success.
That's a good sign.
It is.
A balanced portfolio can help weather market fluctuations.
Exactly.
Now let's zoom in on the individual business segments.
Yeah,
We know that T&D is their star performer.
for sure.
But how much is it actually driving their overall growth? And are there any hidden gems or, areas of concern within other segments?
Yeah. So their T&D business continues to be the powerhouse,
Okay.
accounting for 55% of their consolidated revenue in Q2 of FY25,
Wow.
and a significant portion of their overall growth.
Okay.
But, it's not a monolithic entity. Their core T&D business, operated directly by KEC, grew by a remarkable 34%,
Okay.
while their subsidiary, SAE Towers,
Yeah.
experienced a slight revenue dip.
So even within a high-performing segment, there are some nuances.
There are.
It's important to kind of look beyond just the headline figures.
Right.
What about the non-T&D segments? Are they contributing as expected or some lagging behind?
Yeah, so the non-T&D segments as a whole saw a minor revenue decline, down 3% year on year.
Okay.
But remember, this category includes several businesses, each with its own story.
Sure.
Their civil business, for example, is expanding internationally and grew 9% year on year.
Oh, wow. Okay.
Similarly, their cables business saw healthy 7% growth, fueled by new products and entry into the U.S. market.
I like that.
Yeah,
So there are pockets of growth within the non-T&D segment.
absolutely.
But a 3% overall decline suggests some areas might need a little bit of attention.
Yeah, for sure.
Where are they facing some headwinds?
I'd say the most notable challenge is in their railways business, which saw a significant 35% revenue decline.
Oh, wow.
They're facing increased competition and some margin pressures in that specific market.
Oh, okay.
But it highlights the importance of their diversified portfolio.
Makes sense.
Strengths in one area can help offset challenges in another.
It's all about balance, right?
Exactly.
Balancing risk and opportunity
Yes.
across different business lines.
Right.
But let's shift gears now and talk about their balance sheet.
Yeah.
They're growing rapidly and expanding globally,
Right.
but they've also managed to reduce their net debt.
It's impressive.
How is that possible?
Yeah, that's one of the most impressive aspects of KEC's performance this quarter.
Okay.
Despite a 12% revenue growth in the trailing 12 months, their net debt, including acceptances, decreased by a substantial 1,074 crore rupees compared to the same period last year.
Wow, that's incredible.
It's a testament to their financial discipline and their strategic approach to working capital management.
Yeah, those war rooms we talked about.
They're working.
Definitely paying off. But what specific strategies are they implementing to achieve this level of financial efficiency?
One key initiative is their rigorous focus on releasing retention money
Okay.
by efficiently closing out projects.
Okay.
So they're not just letting these payments sit idle. They're actively working to free up that cash flow.
That makes sense.
And they're being more selective about the projects they bid on, prioritizing those with favorable cash flow terms from the outset.
So it's a very holistic approach.
Yes.
From project selection
Yes.
to execution to financial management.
It's all connected.
They're not just chasing growth at any cost.
Exactly.
They're building a sustainable business model.
They are.
And their net working capital cycle shrinking by 3 days down to 130 days proves that this approach is working.
Absolutely. They're getting more efficient at converting investments into cash.
Yeah, that's a sign of a healthy and well-managed business.
It is.
But no company operates in a vacuum, right?
Right.
External factors, both opportunities and risks.
Yes,
They play a huge role in shaping the future.
for sure.
So what are those tailwinds and headwinds?
Right. KEC needs to navigate what are those factors that could accelerate or hinder their progress.
So on the positive side,
Yeah.
the Indian government's massive push for infrastructure development is a huge opportunity for KEC.
Absolutely.
Their expertise in T&D, especially in renewable energy projects, positions them perfectly to
Right.
capitalize on this trend.
Yeah, they're in a good spot.
Yeah, and their strategic expansion into other regions, like the Gulf countries, exposes them to additional growth opportunities.
So they've got some favorable wind at their back.
They do.
But what about the potential storms on the horizon? What are the challenges that they need to address to maintain this momentum?
So one significant challenge
Okay,
is the ongoing shortage of skilled labor in the infrastructure sector.
that makes a lot of sense.
This could impact KEC's ability to execute projects efficiently, especially as their order book grows and projects become more complex.
Right, you need those skilled hands
You do.
to build that world-class
So
infrastructure.
Are there other risks they need to be aware of?
Yeah, I mean, geopolitical uncertainties are a constant wild card.
Right.
Disruptions in global supply chains, political instability in certain regions, even currency fluctuations. All of these can impact their operations and profitability.
Yeah, that's a lot to juggle.
It is.
And while they're a leader in the T&D sector,
Right.
competition is intensifying, especially in areas like railways.
Yeah, for sure.
So they need to stay agile and innovative
They do.
to maintain their edge.
Yeah. And one thing that struck me throughout this whole deep dive is KEC's commitment to transparency.
Oh, yeah, for sure.
They're upfront about the risks they face.
Right.
And they provide a clear picture of their financial health that builds trust with investors and stakeholders.
It does,
Same as well.
absolutely. Transparency is crucial, especially in today's environment.
It is.
But beyond just the financial reporting,
Right.
they're also walking the talk when it comes to sustainability.
Absolutely.
They've embedded ESG principles into their operations.
They have.
Setting ambitious goals and demonstrating measurable progress
Yeah.
in areas like reducing their carbon footprint promoting diversity, supporting local communities.
It's impressive.
I'm glad you brought that up because their ESG efforts are not just a side project.
Right.
They're woven into their business strategy.
They are.
Can you give us some concrete examples of how they're actually putting these principles into action?
Yeah, I mean, they're investing in energy-efficient technologies. They're optimizing their transportation systems and exploring renewable energy sources
Wow.
to power their own operations.
That's awesome.
They've also implemented programs to improve the well-being of their employees and promote a more diverse and inclusive workplace.
Okay, so it's not just good for the planet and the people.
Right.
It also resonates with investors.
It does.
Who are increasingly prioritizing companies with strong ESG credentials.
For sure.
Yeah, it sounds like they're really trying to build a sustainable business in every sense of the word.
Yeah.
Financially, environmentally, and socially.
It's a holistic approach.
It is, but before we wrap up this part of our deep dive,
Yeah.
I want to get your expert perspective.
Sure.
What's your overall assessment of KEC International's Q2 performance? What are the key takeaways for our listeners?
Yeah. I mean, in a nutshell, I'd say they delivered a solid performance with robust growth, expanding margins, and a continued commitment to both financial prudence and sustainability.
I like it.
They're not just building infrastructure, they're building a resilient and responsible business.
That's the key.
But as we've discussed, challenges remain.
Right.
Their future success hinges on their ability to address this manpower shortage, navigate geopolitical risks, and stay ahead of the competition while maintaining their financial discipline and commitment to ESG.
So it's a compelling story.
It is.
And in part 3, we'll dive deeper into those very challenges and we'll analyze what they mean for KEC's future prospects. We'll also explore the broader implications of their performance for the infrastructure sector as a whole. Stay tuned for the final chapter of our deep dive. All right, so welcome back to the final part of our deep dive into KEC International's Q2 FY25 performance.
Okay.
You know, we've covered a lot of ground. We've analyzed their impressive growth, strategic expansion, and commitment to both financial strength and sustainability.
Yeah, we've seen a lot of good stuff.
We have, but you know, as we all know, no business operates in a vacuum. Every success story comes with its share of challenges and potential risks.
That's right, and understanding those challenges is super crucial for kind of assessing their long-term prospects.
Totally.
And one of the most pressing issues they face, and one we've touched on already, is this shortage of skilled labor
Right.
in the infrastructure sector.
Yeah.
It's a global problem, and it's particularly acute for companies like KEC, you know, with a massive and growing order book,
Right.
especially as they venture into these increasingly complex international projects.
It's like having all the ingredients for a feast, but not enough cooks in the kitchen. So how can KEC address this manpower bottleneck without jeopardizing their growth plans?
Yeah, hoping for the best is really a winning strategy.
Never.
Especially in a competitive industry, KEC needs to be much more proactive.
Okay, so what does that look like?
Well, this means investing heavily in training and development programs
Right.
to upskill their existing workforce and attract new talent.
Yeah, makes sense.
They might also need to explore innovative solutions like automation and digitalization to streamline certain tasks and reduce their reliance on manual labor.
That's smart.
And let's not forget the importance of creating a really positive and supportive work environment.
Yeah.
I mean, remember that 83 happiness score we talked about earlier?
Oh, yeah.
That's not just a vanity metric.
No.
It's a strategic advantage when it comes to attracting and retaining top talent in a tight labor market.
It's like that old saying, you can't make a great meal with unhappy cooks.
Exactly.
So investing in employee well-being is not just the right thing to do, it's good business sense.
It is.
But even with the best talent in the world, there are some things you just can't control, like the geopolitical landscape we live in uncertain times.
Very uncertain.
And KEC's global reach exposes them to a whole range of risks.
Absolutely. I mean, geopolitical uncertainties are a constant wild card, and KEC's leadership needs to be really adept at managing them.
Okay, so like what are we talking about here?
We're talking about things like trade wars, political instability in key regions, and even currency fluctuations.
Yeah.
Any one of these factors can disrupt projects, impact profitability, and create headaches for investors.
So how do they mitigate these risks? I mean, it's not like they can just pick up the phone and tell world leaders to play nice.
Right, but they can build a more resilient business by diversifying their operations across different regions and sectors,
Yep.
so they're not overly reliant on any single market.
Got it.
They also need to have robust risk management frameworks in place to anticipate potential disruptions, assess their impact, and develop contingency plans.
Right.
And they need to stay informed, constantly monitoring the global landscape and adapting their strategies accordingly. It's like playing a game of chess on a constantly shifting board.
Right, you got to be a few moves ahead.
Exactly. You need to be a few moves ahead to stay in the game.
And speaking of strategy, let's talk about competition. We know they're a leading player in the T&D sector,
Yes.
but they're facing increasing pressure, especially in areas like railways.
They are.
What can they do to sharpen their competitive edge and stay ahead of the pack?
Yeah, I mean, they can't just rest on their laurels. They need to continue innovating, developing new and differentiated offerings that give them an edge over their rivals.
That makes sense.
And they need to find ways to deliver projects more efficiently and cost-effectively without compromising on quality.
Right.
This might involve adopting new technologies, streamlining processes, or even exploring strategic partnerships.
Yeah.
It's a constant race to improve, and they need to stay ahead of the curve
It's not just about winning the projects.
Right.
It's about winning the right projects
and executing them flawlessly.
and executing them flawlessly. I like it, but even the best strategy in the world won't get you very far if you're not financially sound.
That's true.
We've talked about KEC's impressive debt management,
Yeah.
but are there any financial risks that could derail their progress?
Yeah, I mean, they've done a commendable job managing their debt and working capital.
Right.
But as they continue to grow and expand, they need to stay vigilant. Interest rate fluctuations can impact their borrowing costs, especially for large-scale projects.
Makes sense.
So they need to carefully manage their debt portfolio and explore hedging strategies to kind of minimize that risk.
So you're saying it's important to have a plan B?
Always have a plan B.
And, since they operate in multiple countries, currency risk is another factor they need to address.
Right. Exchange rate volatility can eat into their profits.
Yeah.
So they need to have appropriate hedging mechanisms in place.
So it's a delicate balancing act,
It is.
managing growth, controlling costs, and mitigating risks.
Yeah, it takes a skilled team.
But even amidst all these challenges, there's this sense of optimism about KEC's future.
I agree.
They've got a solid track record, a clear vision, and this commitment to sustainability that sets them apart.
I agree. They're not just building infrastructure. They're building a resilient, responsible, and forward-looking business, and that's a story worth following.
It is. Now, before we wrap up this deep dive, let's bring it back to you, our listener.
Okay.
Why should you care about KEC International's performance?
Yeah.
What's the bigger picture here?
Well, I think KEC is a microcosm of the global infrastructure sector, a sector that's absolutely fundamental to economic growth. Job creation and improving quality of life for people all around the world.
Right.
By understanding KEC's journey, their triumphs and their challenges, we gain these insights into the broader trends that are shaping this vital industry.
It's not just about building roads, power lines, and railways, right? It's about connecting communities,
Exactly.
powering economies, laying the foundation for a better future.
Exactly. And KC's performance has these ripple effects throughout the global economy. Their projects create jobs, stimulate local businesses, and contribute to the development of essential infrastructure.
Right.
In both developed and developing countries, their successes are our successes, and their challenges are shared challenges.
So by understanding KC, we understand a little more about the world we live in and the forces that are shaping our future.
For sure.
All right, so to wrap up, KC International delivered a solid Q2 performance.
Yeah.
They demonstrated strong growth, a focus on sustainability,
Right.
and smart financial management.
For sure.
But as with any company, their future is not guaranteed. Their continued success will depend on their ability to overcome the challenges we've discussed today.
Right.
From labor shortages and geopolitical risks to intensifying competition and financial volatility.
Yeah, lots to keep an eye on.
There is, but it's a journey filled with both promise and peril. But one thing is certain. It's a journey worth watching. And that concludes our deep dive into KEC International's Q2 FY25 performance. We hope you found this analysis insightful and that it's equipped you with a better understanding of this fascinating company and the dynamic industry that it operates in.
It's a good one.
Until next time, keep those brains buzzing.